I want to wrap up here with this screen. You basically have general marketing choices. They're relatively simple. They're not easy, but they're relatively simple. You can accept and embrace the current profits offered. You can focus on history. You can respect and fear the ability for surprises to develop. You can respect how much prices overestimate or overreact to downside influences when they come after experiencing these price peaks. And all those things can cause you to be more aggressive at looking for price protection. Or you can hope for a weather scare with even better sales. It worked last year. You can believe that, or you can believe that you are capable of recognizing that major downturn from just a temporary setback, and you won't get caught in the trap of the deer in the headlight syndrome, which is very easy to do. You can be confident that won't happen to you, and that can be a reason for you not to make sales. You can also choose to ignore most of history and expect that another rare event in 2011. It certainly can happen. Who am I to say that it's not? It becomes a question of whether you're marketing or trading. It becomes a question about risk reward. It becomes a perspective about perspective. From the producer's view, however, you have profits offered. You have historically large profits offered. You have to weigh that out. I think you need to be willing to accept what history shows to be dramatic downside price risk from these historical price peaks. That's kind of the last thing I want to say. Tanya, if you're on here, do you have some questions here that have been sent in?
Absolutely. Thanks, Duane. Great information and important insight and reminders for us to think about as we work with our marketing plans. I do have a couple of questions that have come in. And just a reminder that to ask your questions, if you look on the upper right-hand side of your screen, you should see a dialog box that says Enter a Question. And those will be directed my way, and I will be able to ask those for Duane. So please feel free to do so. So Duane, the first question I have is around basis. And the question is, I have a lot of hedge-to-arrive contracts waiting to set basis. And basis for July in western Minnesota is currently 53 cents under. So, what do you think about basis?
Since he's talking about July, I assume he's talking about old crop positions. First of all, I want to say this about basis. I've been surprised at how little basis has moved in the last period of time versus what we used to see for movement. And I'm not sure I have an answer that I could prove. I am suspicious that because of price volatility, because of margin requirements, because of fear of these margin calls and fear of being able to identify what that risk, I don't care whether you're the producer or you're the elevator, many buyers along that chain have elected not to trade for basis, have elected to just make cash sales, have elected not to do a lot of basis strategies. And because of that, supplies move into the system easier and quicker, and because of that, you don't have elevators holding supplies off waiting for those basis improvement. So that might be one reason that basis has had a difficult time appreciating, even at a time when we thought that we had relatively tight supplies. From here forward, I think a big influence on old crop basis is going to be, what do futures prices do? If futures prices stagnate and or weaken because we get off to a good start, because we think we have more acres, because of outside market influences, because of liquidation, or because of whatever, if we stagnate or weaken futures prices from current levels, basis values will improve. And I think that because of the stocks data that we had yesterday, because the idea that now is that the stocks or the carryout level is actually smaller than what we thought it was, I think the potential for corn basis to improve is much greater today than it was 48 hours ago. And I think the buyers in the cash markets are going to be a little more respectful of that. So I'm guessing that you're going to see your basis opportunities improve. Your basis is going to get tighter. That'll be beneficial to your hedge to rise. The possible, and I'll say possible, the possible mistake about that statement would be if you had a serious weather problem develop in June and then the futures market took off and went crazy. I don't think basis would get wider, but it may not get better. But the odds would, I would say, favor basis values improving in the May through June period. Okay. Tanya?
Good, good. The next question is around acres. So how can we be 8 million acres above last year? The question reads, where do those acres come from, especially when you lose acres every year to housing and development?
I can't say exactly, but the housing and development, urban sprawl, I think accounts for 1 million acres or less on an annual basis. And I think that some will argue that some of those acres taken for those endeavors are not necessarily your better cropland. I know if you see it in your own backyard, a good farm that's taken for urbanization, I know it may feel differently, but I think on a national level that's an argument that's given. I think it's also important to remember that while we were up 8 million from last year, it might be worth realizing that last year was down 4 million from where it was in 2008. So it's not like we're up 8 million from the highest levels we achieved. You know, we're up, 8 million from last year, which was on downticks from the previous, 2 years. I think that there's an argument that probably some of this acres comes out of hay just due to profitability. There's all kinds of arguments that you could put in there. I've not found it advantageous to argue with USDA. They're the jury, the judge, and the executioner, and so you just accept it for what it is. But I do understand the disbelief, and in many respects I share that.
Okay, very good. So the next question is around exports. At these price levels, can end users and our export customers continue to do business for a long period of time, and could this kill demand for years to come?
The best cure for high prices, they say, is high prices. So the answer to that question is yes, it has an influence. Yes, it will hurt demand. Will it hurt it for an extended period of time or for years to come? I'm not sure that would be accurate. But in the same token, if you are, if current prices and current optimistic outlook and current money investment in agriculture globally is something that is occurring, and I believe it is fair to say that while high prices may cut back on demand, which could be seen as temporary, high prices is also encouraging acreage expansion in other countries. It is encouraging other countries to relax their concerns about GMO, genetically modified crops. It's encouraging more embrace of genetically modified crops on more acres globally, which means we're going to expand global productivity. Those things do have longer-term implications. I think it's also fair to say that when we look back in history, when we have these type of events where prices get high, supplies get tight, it is a disappointment in the years that follow when the market does its job and demand is cut back a little bit and production is increased due to price. It does take longer for prices to recover. We do experience tighter profit margins. We do experience poorer price levels. But as we lower those price levels, that demand comes back. So I don't think we have, long-term devastation of demand issues or concerns, but we are, the other side of the coin is we are maximizing global production incentives, and that does have longer-term implications.
Very good. So the next question is about land prices. Do you have any insight on land prices?
Well, they're certainly going to be impacted by higher commodity prices, but I think the most important influence coming on the horizon is the interest rates. As interest rates go up, what somebody's willing to pay for land is impacted, what somebody's willing to pay for rent is impacted, and it becomes a feed on itself mentality. There's a certain foundational value to U.S. agriculture land that's not going to go away. And it's going to have a significant value, and that floor value, whatever it may be, is going to be at some level higher than what we considered the floor to be, a few years ago. That said, current land prices, especially some of the high-end numbers that you hear kicked around, I think everybody would have to admit that they're somewhat inflated with euphorism that may not be sustained. And so, yeah, there's potential for a setback in land prices, in my opinion. But I think that everybody's region is different. But in my particular region here, you wouldn't want to put a $5,000 price tag on a piece of ground that you wasn't willing to let go. You maybe wouldn't want to put a $6,000 price tag on a piece of ground you didn't want to let go. But if you start to raise interest rates, if commodity prices were to back off, you know, that instead of being $5,000 or $6,000 that you're throwing out for those type of numbers, they might go back to $4,000. So I think there's room for land prices to relax in the years ahead based on interest rates and based on the assumption that the global supply-demand balance sheet will become less tight because of the incentives being offered with current prices. So I think there is some downside risk here over the next few years, but I don't see how. Let's put it this way: land prices, agricultural land prices, are going to continue to maintain a very solid value. I'm not so sure that the biggest risk to land prices might be some potential for genetic improvements that allow much improved production of crops on less than ideal lands, or lands that would now might be considered marginal. As you look into the future and ponder the possibilities, I wonder if that would be more of an impact. All of a sudden you'd open up the pool of land production capacity to more acres than what you ever dreamed possible to produce now. So.
Good. We have, as you can imagine, a number of questions that are related to ethanol. And the first question is, do you believe there will be government intervention for tight stocks for corn ethanol or livestock feed usage?
Number one, I'm not an ethanol expert. Number two, it's very difficult to get what I consider to be highly quality ethanol information. I think the ethanol industry is more efficient than what maybe we plug into our working figures, but you can't get anybody to admit to that. In terms of government action, let's put it this way: government responds to crisis. If there's a crisis, yes, I absolutely think they would intervene in some way. That is not what, you know. You have to get to that crisis point. I'm not sure that you have a crisis point right now that causes them to take dramatic action. If you're a livestock producer, you feel like you got dramatic conditions, a dramatic crisis right now, because you see the ethanol producer being subsidized. You see multiple people in that corn production ethanol thing being subsidized, but you as a livestock feeder are not subsidized. If you're not subsidized, the odds are you're going to be the one that suffers the most. So from a livestock producer's perspective, I'm sure they think this is an immediate crisis. But if we were to have a normal year now, I don't think you would see dramatic action. But what you could see is an erosion of support in the ethanol industry. You could see tax incentives go away. You could see tariffs that protect other ethanol from coming in. Those tariffs could go away. I think those type of things on the ethanol industry is something that we should expect. I'm not sure if the question is referring to, like, all of a sudden they're going to step in and say ethanol plants must operate at 50% of capacity, or you got a 90-day moratorium, you cannot produce ethanol. I think something like that would only happen if it was very dramatic, and that would be, and dramatic in my definition right now would be a problem for 2011 production similar to what we had last year. So I think, yes, it's possible, but I don't think it's going to happen.